And so when you talk about the mismanagement and the squandering of the privilege that is the world reserve currency, in order to make a new system work, you will need trust. And I think the reason behind buying gold and silver and the prices and the premiums, look, it has less to do with supply chains. Yes, that certainly is a factor. But right now, too many people believe that we're out of the woods and they're looking to other areas. Maybe things aren't so great. Maybe we do need to add some gold and silver to our portfolio because inflation is not going away.
Gold was on track for its first quarterly decline in three, squeezed by expectations for more U.S. interest rate hikes, while moderate inflation prints provided some support on Friday. Prices have shed 2.5% this quarter, dropping from levels just shy of all-time highs of $2,072 in May to below $1,900 on Thursday due to nervousness about the health of the U.S. banking sector. The dollar index and 10-year Treasury yields were both set to gain this quarter, eroding gold's appeal for investors holding other currencies. Gold prices rose after the data as traders bet the Fed was slightly less locked into a July interest rate hike, reducing its chances to 84% from nearly 90% earlier. Federal Reserve Chair Jerome Powell said most of the central bank's policymakers expect they would need to raise interest rates at least twice more by year-end, with U.S. inflation well above the 2% goal and a labor market that's still very tight. In a recent interview, Andy Schectman, CEO and president of Miles Franklin, expressed that gold should perform well in the current negative yielding environment. Regarding the amount of gold being withdrawn from major exchanges such as COMEX and the London Metals Exchange, Schectman highlighted that approximately 250 tons of gold had been delivered off COMEX since the start of the year, indicating a significant movement of physical gold. Moreover, the substantial number of silver contracts that have been standing for delivery, totaling more than 65 million ounces of silver, represents considerable demand for physical silver. Now let's watch excerpts from Andy Schectman's interview with SOAR Financially. Be sure to watch the entire video and consider subscribing to our channel. Remember to enable post notifications to stay updated on our latest uploads. Thank you and enjoy the video.
Gold should really do well in this environment, in a real negative yielding return environment. Look, the bottom line is that gold has been suppressed for so long by the West in an effort to support the bond market, in an effort to support this illusion of a strong dollar. And at the same time that we are seeing the dollar or the price of gold, get hammered, let's talk about something real quick in terms of what we've seen with deliveries off of COMEX. The biggest money in the world, the most sophisticated money in the world, has been draining COMEX and draining the London Metals Exchange to a level that we've never seen before. Massive deliveries coming off of the exchange month over month over month. Let me see if I can get you some actual numbers here, which will, I think, make a lot of sense to what we're talking about. If we take a look at, here it is right here. Okay, central bank gold purchases we mentioned, and it's really growing. I mean, Singapore up 35% in the last 3 months. Central Bank of Iraq adding 2.5 tons. Turkey, everyone's buying gold, but when you take a look at what's happening in terms of the deliveries off of COMEX, I want to see if I can find this. Here we go. Okay, so in terms of deliveries off of COMEX since the beginning of the year, we've seen somewhere almost near 250 tons of gold delivered off of COMEX since the beginning of the year. And when you talk about gold and silver being drained off of the exchanges, it's happening. Over 12,966 silver contracts, or over 65 million ounces of silver, has stood for delivery off of COMEX since the beginning of the year, almost 13,000 contracts. You're talking a situation where the biggest money in the world has been using the suppression of the paper price to drain the exchanges, whether it be the LBMA, the COMEX, the Shanghai Gold Exchange, or the central banks, who have, as we've mentioned, for the last 18 months bought more than they ever have. So that's why it's hanging in there. But the conventional wisdom is telling you in a rising rate environment that gold should be doing poorly, and it just allows them to beat down the price with rhetoric and suppress the price with paper contracts. And when you talk about how they do that, I'm going to use silver as an example, right? Because it's very important that people understand just exactly how they do this. About a week ago, when the price of silver got clobbered, some idiot dumped 25,890,000 ounces of silver onto the market in 15 minutes, or 5,178,000 5,000 ounce contracts of paper like that at the open in New York. Now, who would do that? Why would anyone dump that kind of volume at the open? You're guaranteed the worst possible settlement. That trader should be shot and fired, and maybe in that order. And so the point of it is that it reeks of desperation. The big monies are doing what they can to hold down the paper price. Maybe it's in an effort to drain the exchanges. Maybe it's in an effort to support this illusion of strength of dollar and stability. But any way that you cut it, the bottom line is this, Kai. The price is being betrayed by the most well-funded and well-informed, sophisticated investors on the planet, draining all of the world's exchanges. And
during the interview, Schectman also pointed to the increasing repatriation of gold by European central banks and the significant gold purchases by central banks worldwide in the past 18 months as evidence that gold is gaining in value. Jim Rickards, an economist and author of Currency Wars, has predicted that a new BRICS currency could be unveiled, weakening the role of the US dollar in global payments and eventually displacing it as the world's leading reserve currency. Rickards has said that this process would be unprecedented and that the world is unprepared for the geopolitical shockwaves that it would cause. Schectman agrees with Rickards' assessment and has been predicting the rise of a new reserve currency for the past 3 years. The IMF has acknowledged that central bank digital currencies, CBDCs, need backing for stability. Schectman believes that gold could serve as that backing, as it is a scarce and durable asset that is not subject to government manipulation. He believes CBDCs backed by gold would be more stable and secure than those not. Let's get back to the interview.
Let's go back about 4, 5, 6 months ago. There was a report that came out of the IMF that said gold, an international reserve currency, a barbarous relic no more, question mark. The IMF talking about gold's role as money and not a barbarous relic, and its role as an international reserve currency, whether it be a vehicle or part of an international reserve system. You got the head of the IMF coming out 2 weeks ago and saying that CBDCs need to be backed by something in order to give them stability. You have all of the European central banks repatriating their gold from the New York Fed and the Bank of England. You have central banks buying more gold over the last 18 months than at any time in history, the biggest first quarter ever on record by the central banks. My feeling is that the only way that this really truly works is by pegging it to gold. But why now? I'll tell you why. Jim Rickards just came out, and I've been saying this for 3 years. In every interview I've done for 3 years, I've been screaming the BRICS going to issue a gold-backed currency. What did James Rickards just say? August 22nd, the South African meeting, he believes they will issue or introduce their new commodity-backed currency. Now, they told us it will be backed by a basket of commodities, gold included. Jim Rickards thinks that becomes too convoluted, that it will most likely just be gold. What did the IMF just say? Gold's not a barbarous relic no more, question mark. What did the head of the IMF just say? CBDCs need to be backed by something. I was asked this question in Vancouver by Michelle McCory from Kitco. What do you think could derail or challenge the BRICS in issuing this currency? And by the way, the BRICS and the Belt Road Initiative and the Shanghai Cooperation Organization and the New Development Bank, well, by the way, OPEC is Saudi Arabia is involved in every one of those institutions, every one of them. All the OPEC countries are on the Belt Road. This is a trend where the dollar's hegemony is being called into question. And I think if I'm OPEC, if I'm Saudi Arabia, would I rather sell my oil to a country that has chosen inflation over austerity, that is inflating away their currency, that is going green, that is not supporting the combustion engine fossil fuel agenda, in fact, is pushing back against it and moving away from it, and is openly antagonizing Saudi Arabia in that respect. Do you think they want to sell us their oil, or would they rather join up with an amounts to 90% of human population that is going to issue a commodity or gold-backed currency, and they're all using oil. So all of these things are spinning very, very quickly. But my real feeling is that the reason you're hearing about all of this stuff right now is that there is a very strong and somewhat substantiated rumor that they're going to issue a commodity-backed currency to challenge the Western hegemony as soon as August 22nd. When you look at it from a traditionalist standpoint, yeah, with rates rising, that is kind of the environment where gold would languish a little bit. But it's important to understand there is a term in economics called Gibson's paradox, which speaks to the inverse relationship between the price of gold and real interest rates. Now, even though you got interest rates on the 10-year Treasury barely at 4% right now, but the federal funds rate at, I don't know, 5 or whatnot, you have inflation much higher than that. We are below the level of inflation.
Despite the recent decline in gold prices, some positive signs remain for the precious metal. The amount of gold being withdrawn from major exchanges suggests that there is a demand for physical gold. Additionally, the substantial number of silver contracts that have been standing for delivery indicates that there is also demand for physical silver. Overall, the outlook for gold remains positive, especially in the current environment of negative yielding. What is your outlook for gold in the future, especially in the current environment of negative yielding? Please share your comments and observations in the comment section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.